Imagine a company whose products function in an environment colder than outer space, where particles flicker in and out of measurable reality, and yet its financial life burns hotter than any speculative stock on the NASDAQ. A company whose market capitalization hovers around $10 billion, while its annual revenue struggles to surpass $8 million. That company is Rigetti Computing, ticker symbol RGTI. It is the definition of a paradox, a publicly traded firm whose value rests not on what it earns today, but on what humanity might achieve tomorrow. For those watching this on Shorts, you can find the full version linked below to experience the complete story without interruption. This video also includes up-to-date trading strategies based on the latest market conditions, so stay with us until the end. To understand Rigetti is to understand how far investors are willing to stretch the concept of faith in technology. Rigetti was born in Berkeley, California in 2013. Its founder, Chad Rigetti, was no entrepreneur chasing a trend. He was a physicist from IBM's Quantum Research Division, a scientist stepping out of corporate laboratories to pursue the grandest dream in computation, building a machine that could solve problems beyond the reach of classical supercomputers. Classical computers process bits, which are either 0 or 1. Quantum computers, however, use qubits, which through a principle called superposition can be both 0 and 1 simultaneously. When multiple qubits become entangled, a phenomenon where their quantum states intertwine, the computational space expands exponentially. This is why a system of only a few hundred reliable qubits could, in theory, perform calculations impossible even for today's largest data centers. But in theory is the key phrase. Engineering such stability requires controlling noise, temperature, and magnetic fields at precision levels that push the limits of physics itself. Most companies engaged in this kind of frontier science remain private for a decade or longer. Venture investors absorb the risk quietly until prototypes mature and early commercial use cases emerge. Rigetti took a different route. On March 2, 2022, it merged with a SPAC named Supernova 2 and listed on the NASDAQ, going public long before any significant revenue. In conventional finance, that sequence is reversed. Firms typically go public to expand existing operations, not to fund fundamental research. Rigetti's early listing was a radical inversion of that norm. It meant that the capital markets themselves would underwrite a scientific experiment, a process rarely exposed to quarterly earnings pressure. This move revealed two things. First, that Rigetti needed access to deep, liquid capital, and second, that it believed investors could be persuaded to fund discovery itself. At first, the market rewarded that conviction. In 2022 and early 2023, quantum computing became the new narrative frontier. Investors who missed the artificial intelligence boom saw RGTI as their second chance at exponential growth. The stock surged, driven not by financial performance, but by imagination. For a moment, Rigetti represented something sacred in markets, the hope that belief could precede evidence. Yet, by the end of 2023, evidence had become unavoidable. Annual revenue sat near $10 million. Net losses approached $200 million. To contextualize, a typical tech firm with that level of loss would normally generate at least $100 million in sales. Rigetti's imbalance was staggering, but investors overlooked it, at least temporarily, because of what came next. In December 2023, Rigetti launched its first commercial quantum processing unit, the Novera 9-qubit QPU. Unlike its previous cloud-based offerings, this was an on-premises system that research institutions could install in their own labs. It represented a tangible milestone, quantum hardware moving from theory into production. In 2024, the company followed with the Ankaa-3, an 84-qubit processor achieving a median 2-qubit gate fidelity of 99.5%, a number that in quantum computing circles borders on the miraculous. Fidelity measures how accurately a quantum gate performs a desired operation compared to the mathematical ideal. Each fraction of a percent brings hardware closer to practical error correction, which in turn determines whether quantum computers can ever achieve reliability. That 99.5% figure wasn't just a statistic, it was proof that Rigetti's architecture could scale. Investors responded accordingly. From its lows near $1, the stock rocketed to nearly $60 by mid-2024, a 50-fold gain that temporarily made Rigetti one of the hottest tickers in the world. But markets eventually returned to fundamentals. On November 10th, 2025, Rigetti released its third quarter earnings, and the numbers pierced the narrative. Quarterly revenue came in around $2 million, trailing 12-month losses ballooned to roughly $350 million. Although the company beat earnings per share expectations by tightening expenses, it missed revenue forecasts. The next trading day, the stock tumbled more than 8%. Analysts described it as a mixed quarter, Wall Street code for optimism colliding with arithmetic. Investors were reminded that while physics could bend the rules of nature, finance still obeyed the laws of cash flow. In most public companies facing such a scenario, mounting losses, limited revenue, and volatile sentiment, management typically pivots. They might pursue mergers, spin-off divisions, or transition towards software licensing to generate cash flow. Rigetti did none of these. Instead, CEO Subodh Karni reaffirmed his long-range vision, stating that the company was 3 to 4 years away from demonstrating quantum advantage. It was a statement that broke with the unwritten rule of public markets that executives must manage near-term expectations. In declaring a 3 to 4 year horizon, Kulkarni essentially told investors that Rigetti was not a short-term bet. It was a scientific journey unfolding under the glare of financial disclosure, a phenomenon rare in the modern stock market where patience is priced at a premium. Meanwhile, the company was quietly building strategic validation. In September 2025, Rigetti secured a 3-year, $5.8 million contract with the U.S. Air Force Research Laboratory to develop quantum networking nodes. That partnership was significant because government contracts in defense research are not awarded lightly. They require reliability, traceable progress, and technical credibility. For a company of Rigetti's modest scale, winning such a contract implied institutional recognition far beyond its financials. The following month, in October 2025, Rigetti announced support for NVIDIA's NVQ Link, an open platform connecting quantum processors with GPU-based AI systems. In the traditional trajectory of hardware development, startups typically delay ecosystem partnerships until after product stabilization. Rigetti's decision to integrate early signaled something deeper, a recognition that quantum computing would not replace classical computing, but augment it. This was the birth of the hybrid paradigm, quantum and AI working side by side. The implication for investors was profound. Rigetti's technology could find relevance sooner, not as a standalone replacement, but as a co-processor within the broader AI ecosystem. Still, the financial structure remained fragile. Over the trailing 12 months, revenue stood at roughly $7.5 million, down about 10% year over year, while net losses widened by more than 160%. With a market capitalization near $10 billion, Rigetti's valuation to sales ratio exceeded 1,000. For context, established semiconductor firms trade between 5 and 10 times sales. Even aggressive AI startups rarely exceed 100. This meant that Rigetti's valuation was almost entirely narrative-driven, a market price reflecting belief, not performance. Its beta, around 1.6, confirmed its nature as a volatility magnet. Each announcement, a contract, a milestone, or a rumor could move the stock by double digits in hours. As of November 12, 2025, shares trade near $29.70, down about 5% on the day. The 50-day moving average sits around 32, the 200-day near 42. The relative strength index is roughly 45, indicating neutral momentum with a bearish tilt. The MACD has turned negative, suggesting short-term weakness, while the average true range of $5 underscores extreme volatility. Technical traders see support around 29 to 30 and resistance between 34 and 40, a compression range where conviction fades and narratives decide direction. In the broader market, hardware startups at Rigetti's stage typically follow a predictable arc: prototype, early customers, recurring revenue, scale. Rigetti inverted this process. It scaled attention before it scaled revenue. That inversion has both advantages and risks. The advantage is access to public capital during the research phase, rare oxygen for a company racing to solve one of physics' hardest problems. The risk is that every scientific delay becomes a financial headline, every experiment a referendum on belief. Rigetti's journey is therefore not just a technological challenge, it is a social experiment in how markets price possibility. Looking ahead, the company's roadmap is unambiguous: more than 100 qubits by late 2025, 150 by 2026, and over 1,000 by 2027. Meeting these milestones would elevate Rigetti from a research venture into a provider of computational utility, systems capable of solving optimization, cryptography, and material science problems at unprecedented speed. However, history offers caution. Even giants like IBM and Google, with deeper pockets and larger teams, have adjusted their quantum timelines as technical hurdles emerged. If Rigetti delivers on schedule, it will not only prove its technology, but also demonstrate operational discipline that few experimental firms have achieved. If it slips, investors may reinterpret every past rally as evidence of misplaced faith. So where does that leave us? For short-term traders, Rigetti is a volatility play. The $29 zone offers speculative entry. A breakout above 34 could target 40, but failure to hold 29 risks a drop into the mid-20s. For medium-term investors, the next 6 to 12 months hinge on whether government contracts expand or NVIDIA integrations produce measurable progress. For long-term believers, those convinced quantum computing will one day transform industries, Rigetti remains a pure exposure to that future. Should it achieve even a fraction of its 1,000 qubit ambition, today's price may one day look like an early bargain. If not, it will join the ranks of companies that were technologically right but financially premature. In the end, Rigetti Computing is less a stock than a mirror. It reflects the eternal tension between imagination and execution, between what markets want now and what science demands over time. Its machines operate in quantum superposition, both promise and peril at once, and so does its valuation. To invest in Rigetti is to accept that uncertainty is not a flaw in the system, but the system itself. Because in both physics and markets, observation changes the outcome. Thank you to everyone who watches, subscribes, likes, comments, and shares these videos. Your support helps this channel bring you deeper, sharper stories every week, and we'll keep earning that trust with even better content ahead. This was ValueStir.